Hey traders, hey money makers, welcome to Vietnam again. As you guys know, I'm still in Vietnam and most of the time I'm dressed like this because it's still summer here and everywhere is hot, even though we have the AC in here, but most of the time I'm just in this flexible attire, right? So we have a series we're going to be doing today. I remember when I just got here, when I got to Vietnam, I have a couple of vlogs which you can find on my channel, or even if I haven't uploaded, they're going to be coming up very soon, which I'm just showing you guys around because Vietnam is very beautiful. It's way more than my expectations. We have a whole villa to ourselves. In short, we have a couple of vlogs we did that we're going to be showing you guys all of this, right? And when I just got here, you guys were requesting a lot for us to be able to do a follow-up on a video we did about scalping. So I did a live video about scalping where I was showing you guys step by step how I could scalp. That was a $1,000 account to almost about $5,000 live on camera, everything recorded. So most of you guys say no, some of us are swing traders, some of us are day traders. Let's have like a follow-up where we can still do the same thing or still do the same thing as a day trader or do the same thing as a swing trader. For most of you guys who don't know me, my name is Ndemazeah Godlove. I do videos on Forex trading, on business, on personal finance, on travel. I'm the most traveled Forex trader alive, made more than $400,000 in payout in 1 year, everything recorded. And on this channel, my main goal is to teach you on how to trade Forex A to Z. So if this is your first time watching me and you haven't subscribed, make sure you smash that subscribe button below to subscribe to my channel so that you are always updated anytime I come up with awesome content like this. So let me give you a minute. Smash that subscribe button below. Smash that subscribe. Let me hear the sound. Boom. Perfect. So now, after we've taken that out of the way, let's get straight to the video, and I'm just going to be showing you guys step by step how you can grow any live or any profit account as a day trader. All right, then after this series, from the way I'm seeing, is going to be 3 to 4 videos. We're going to be done with the series. We're going to be going to swing trading, because most of the time when I jump from country to country, when I'm traveling from country to country, I have that freedom. The most important thing I just need is internet connection, and I'm still trading. And most of the strategies I'm using are just swing trading strategies. So after this, we'll still go to swing trading, right? Good. So let's start with day trading. And to start with day trading, I'm just going to put my mic here. Hopefully you guys will still be able to hear me clearly. So to start with day trading, you can see this is the same live account we used last time. Just started this one on $10,000 when I got here to Vietnam about 2 to 3 days ago, and we are already on $11,200. You can see that's the balance right there. You can see that's my live account. That's a live A1 because I have more than 6 different live accounts. So this one, I call this one live A1 because I use this one most of the time for my tutorial videos and for scalping videos, right? So the strategy we're going to be using here is a simple moving average cross strategy. Even though I say simple moving average cross strategy, there is a modification which is the Godlove way. All right, you need to modify it just the same way I want to show you guys on this video for it to work. You need to modify it just the way I'm going to show you for it to work. And to start, it's as simple as that. If you haven't watched that particular video, I'm just going to leave the link up here. Click here, watch the whole strategy, because here we're just going to be going strictly to the practical side of it, right? So watch the whole video, and then you can come back to this particular video. But I'm just going to do like a snapshot of the whole strategy. So the whole strategy, you can see here we have our balance. So I'm just going to close this. I'm just going to quickly close this. So let's close this, and our balance is right here. We have 2 moving averages. So we have the 23 exponential moving average, and we have, so the 23 exponential moving average is our fast moving average, and the 10 exponential moving average is our slow moving average, right? And they have to be exponential moving average applied to median. So I'm just going to click on one to show you guys the parameters. So let's just go to the 23 one, and I'll show you guys what I'm talking about. Let's go to properties. You can see this is the 10, sorry. So the 10 is the fast exponential moving average, and the 23 is the slow exponential moving average. And if you did like economics in school, you'll be able to easily know how this median or the moving average is calculated. But we're not going to be going into those details. I'm just going to practically show you guys what is working. So for example, you can see this 10 exponential moving average method is exponential applied to, it has to be median. not the close price. Because if I click here, you can see we have the close, the open, the high, the low, the smooth, the weighted, previous. So it has to be what again? It has to be the median price, because the median price tends to filter out a lot of fake signals. So it has to be the median price. Then you just click on OK. You bring in another indicator or another exponential moving average with a period of 23. You can see this is with a period of 23 applied to median, and this one is going to save as our slow moving average. Good. So how do we get a buy signal? A buy signal is very simple. Anytime the fast, that's why it's called fast, anytime the fast exponential moving average crosses below, from below to above, crosses over the slow exponential moving average from below to above, that's a buy signal. So we would have gotten a buy signal right here. As easy as that. Remember, I'm just taking, this is just a live chart. I'm just taking, this is the current market price. So this would have been a buy signal right here. So as soon as we get this cross, we're just waiting for this candlestick to close. So this candlestick would have closed right here, would have gotten into this trade right here, would have gotten in right here, and go for what? And go for a risk to reward of 1:2. So our risk would have been somewhere here, would have been risking about 100 pips to go for 200 pips. Remember, my stop loss normally just go below the recent swing, somewhere here on 100 pips, and I go for 200 pips. Boom, 200 pips would have been somewhere here. That's it, 200 pips. We're already out of the trade. A risk to reward of 1:2. Guys, you need to go for a risk to reward of 1:2, not just 1:1, at least 1:2, so that even if you have a win rate of 40%, you will still be making money at the end of the day. So that's the strategy in a nutshell. As easy as that, that's how the strategy works. Now, if you are scalping, you have to now use two different time frames. You use one time frame as your overall time frame, or as your higher time frame, and then you use another one as your lower time frame. So if you are scalping, you normally use the 1 hour time frame as your bigger time frame, and the 5-minute time frame as your scalping time frame. If you are day trading, normally you use the 4-hour time frame as your overall time frame, and the 1 hour time frame as your day trading time frame. If you are swing trading, then you use the daily time frame as your bigger time frame, and the 4-hour time frame as your trading time frame. That's how the time frames work, and that's how you are supposed to use them to trade this particular strategy. So after taking that out of the way, since we're going to be scalping, or since we're going to be day trading, we need two time frames. We need the higher time frame and the lower time frame. So the higher time frame in this case is going to be the 4-hour time frame, and the lower time frame is going to be the 1 hour time frame. So that's very, very clear. So let's just quickly go here. We can start on gold. So that's why you can see how I arrange all my currency pairs, right? I have the lower time frame, the higher time frame, and the lower time frame. High time frame, lower time frame, high time frame, lower time frame. As easy as that. And since we're going to be day trading, my high time frame is going to be on the 4-hour time frame, and my lower time frame is going to be on what? On the 1 hour time frame. High time frame on the 4-hour, lower time frame on the 1 hour. I just do that on, just click on, I don't even need to open it just from outside. I can already just click on 1 hour, click here, put on 1 hour. Just put everything. I'm just going to quickly put everything. My lower time frame, you can see it still has the setup I was using for scalping, but since we're not going to be scalping, I just need to quickly put my lower time frame on the 1 hour time frame. As easy as that, as easy as that. This one goes to the 4-hour time frame, and this one goes to the 1 hour time frame. Good. 1 hour time frame, 1 hour time frame, 1 hour time frame. Perfect. So after doing this, now we start on the first currency pair. What we are doing is we are just scalping through the different currency pairs to see the one we're going to have an opportunity. As easy as that. We're just quickly going through to see which one is going to give us an opportunity to trade. So let's start with the first one on the 4-hour time frame. Remember, the indicator is still here. On the 4-hour time frame, what are we trying to confirm? We're trying to confirm if the market is in an uptrend. And you can see clearly this market is in a clear uptrend. So long as you see both moving averages sloping upward with the slow moving average below or below the fast moving average, that's an uptrend. And if the opposite happens like here, where the fast moving average is below the slow moving average and is sloping downward, that's a downtrend. You don't need any other indicator to show you that. That's a clear downtrend. Good. So we've already confirmed on the 4-hour time frame that this is a clear uptrend. So on the lower time frame, we want to confirm if the lower time frame, our time frame of reference, is also on an uptrend. And if it's also on an uptrend, we're just going to be looking for an opportunity immediately, right? So let's quickly go here, and we're just going to swipe right to the end of the video just to confirm. So if we go here, perfect, we can see that there was actually a cross. The market has been in an uptrend right to somewhere here where we had a cross on the 1 hour time frame. That cross on the 1 hour time frame hasn't been confirmed. So we are still, as of now, the downtrend was crossed somewhere here. We haven't gotten another cross of the fast moving average crossing over the slow moving average to confirm an uptrend. So we need to wait for a couple of candles, maybe a couple of hours, to actually confirm if these moving averages are going to cross. All right, and if they cross and they close as bullish, that's where we're going to be taking. That's where that particular scenario is going to confirm what we had on our high time frame, and we're going to be taking a buy. So for now, on that currency pair, we just wait. Currency pairs in the forex market that are liquid and you can trade them at any time. So if you go to one and you don't see setup, you go to the other. So we can quickly go down to what again, Great Britain Pound USD. We don't even need to go far. Clear uptrend on Great Britain Pound USD. So we quickly go to the 1 hour time frame to see what's happening on the 1 hour time frame. If the 1 hour time frame is also on a buy trend, then we're just going to be looking for an opportunity. The same thing was on a buy trend, then we had a cross here, and we need to wait to see what happens after this consolidation. So for now and again, we just wait. And remember, if it's on a buy trend and you are already, maybe you come when the market is already sloping upward, you will be able to jump into the trade when the market push back to the fast moving average or push back to between the slow and the fast moving average, meaning you would have gotten into the trade somewhere here, go for a risk to reward of 1:2. You would have gotten into the trade somewhere here, go for a risk to reward of 1:2. You would have gotten into the trade somewhere here, go for a risk to reward of 1:2. This one would have been a loss, and then you've made almost about 6% down here. So as a forex trader, you're going to have some losers. You're going to have losers, whether you like it or not. But the most important thing is your winners should be bigger than your losers. All right, good. Now let's quickly go to another one. Here again, we don't have any trade here, so let's quickly go to another code. I want us to at least take a trade, then we'll be able to come back on episode 2 to follow up on what is actually happening. So on the 4 hour time frame on USD JPY, we can confirm the market is in a downtrend. You can see we had a cross somewhere here. So this is the cross we had, which the market is now in a downtrend on the 4 hour time frame. So if we confirm on the 1 hour time frame that the market is still on a downtrend as well, then we're going to be looking for a sell opportunity. Perfect. You can see the market instead changed from a downtrend to an uptrend in the lower time frame. So we're going to wait again. We're going to wait again until this market turn into a lower time frame, or until the higher time frame, which is the 4 hour time frame, change from a lower time frame, change from a downtrend to an uptrend, because you can see it's actually still in a downtrend. So we'll be able to take a buy opportunity on the 1 hour time frame if the market change on the higher time frame from a downtrend to an uptrend. All right, so for now and again, we just wait to see what's gonna happen. And then let's quickly go to Euro USD. Euro USD, we can confirm this is a clear uptrend on Euro USD. Let's go to the 1 hour time frame and see what's happening. So let's just go to the end of the chart. Okay, on the 1 hour time frame, remember Euro USD, Great Britain Pound USD, SAU USD, they tend to have a positive correlation, meaning they work in a similar way. If you have a setup on Go, most of the time you have a setup on Great Britain Pound USD. So here again, you can confirm we had a cross somewhere here. So the market is seemingly becoming a downtrend on the high time frame. So we need to wait until on the lower time frame. So we need to wait until the higher time frame is also on a downtrend, or we wait until now the lower time frame turns into a higher time frame, or we wait until the lower time frame turns from a downtrend to an uptrend. If it turns from a downtrend to an uptrend, voila, that's a confirmation that all the time frame, both the high time frame and the lower time frame, are in synchronization. They are in one direction, and then we can trade with confidence, knowing that we're not going to have stop loss hunting and all of that. So for now and again, we haven't gotten trading. Sometimes more money is made in forex trading waiting than actually trading. So you need to actually look for that good setup. You don't need to hurry. We've been going through almost about 5 different currency pairs, and you guys can see clearly we haven't seen any clear setup. So we just keep looking until we see that perfect clear setup, then we can take a trade. 4 hour time frame, we can confirm this market is on a downtrend. Let's go now to the 1 hour time frame to confirm if the market is also in a downtrend. On the 1 hour time frame, we had a cross somewhere here, and this typical consolidation. So the market is more like in a high time, in an uptrend on the lower time frame. If we go to the 4 hour time frame, we can confirm on Great Britain pound card. We don't even need to go far. Great Britain pound card is in a very clear uptrend. So let's go to the 1 hour time frame to see if we're also going to get a clear uptrend on the 1 hour time frame. Perfect. On the 1 hour time frame, we had a cross again. So Friday, most of the time I see it, because yesterday, that's why yesterday I recorded and I shared on Instagram, made more than $19,000 using all of this setup, because you could see this was what was happening the whole of yesterday. The 4 hour time frame was in an uptrend, 1 hour time frame clear uptrend. So I just kept waiting for the market to push back to my slow or fast moving average, and I buy again. Just kept doing that, and by the end of the day I was almost on $19,000 to $20,000. But for today, you can see the market is consolidating. So I don't have any setup again. This is like a learning lesson. I don't have any setup again. If we go to the 4 hour time frame on Great Britain pound JPY, you can confirm market is in a clear uptrend. We had a cross somewhere here on this one. So this was a cross, and for now the market is in a clear uptrend. So 1 hour time frame, do we confirm that 1 hour time frame is still in an uptrend? Let's see. Perfect. 1 hour time frame is in an uptrend, and then the market is pushing back to our fast moving average. So this market pushed back to this fast moving average, and then the next candle that closed is a bullish candle. So the procedure is simple. If the market can push back to your fast moving average, or between your fast and your slow moving average, and you get the next candle which is a bullish candle, candlestick pattern doesn't matter in that case. The next candle which is a bullish candle is an indication that bulls are getting into the market, and then you get into the trade at that particular point in time. All right, so for now we are just waiting to see what will happen, which hopefully the market is going to push back to this particular area somewhere here. Then we'll wait for the next bullish candle, and then we'll get in. As soon as we get the next bullish candle, we'll just get in with a buy. Our stop loss go below the recent swing of that bullish candle, and we go for a risk to reward of 1:2. Meaning if we are risking 1%, we're going for 2%. If we're risking $1, we're going for $2. We're risking one banana, we're going for 2 bananas. That's the meaning of risk to reward. So for now, I can already see a potential trade forming up here. So what I do is I'm just going to pull this one right out. I'm just going to pull it right out to this particular level so that I know there's actually a trade here cooking. Then I'm going to put this one back here. So most of the time when I just see that one out, I can already know that there's actually a trade which is cooking up. So I have a trade only cooking up on this one for now. Or these other ones don't matter because we haven't analyzed them. So we have a trade which is cooking on Great Britain pound JPY. Let's quickly go to Great Britain pound NZD to see on the 4 hour time frame what's happening on the 4 hour time frame. The market is in a clear downtrend, and then on the 1 hour time frame, what do we have? Do we also confirm it's on a downtrend? In the 1 hour time frame, we instead confirm the market is in an uptrend. So we can't actually do anything in that particular case. Let's go to Euro JPY. This is a good pair. On the 4 hour time frame, we can confirm a clear uptrend. Let's see on the 1 hour time frame. Do we confirm an uptrend on the 1 hour time frame? Perfect. We confirm an uptrend, which what I just explained earlier is about to form. So in most cases, I'd advise for you to wait. Always wait for the perfect moment for the market to push back, and then the next candle is going to be in a couple of hours. You will see another candle will close down as a bullish candle. So long as you see another candle closing as a bullish candle, that's where you get in. Remember, this would have been a fake signal right here, because by the time this bullish candle was closing, the market hasn't pushed back to our fast or between the fast and the slow moving average, so we wouldn't have gotten in here. So since the market has pushed back right here, any blue candle that forms after this, that's where we're going to be getting in. But since I want us to take at least a trade before rounding up with this video, we're going to be taking a trade on this particular one, but being very cautious. I advise you to wait. This is my live account, but I want us to have a trade before we move into episode 2, right? So to have a trade, you can see I already know that if we're getting in somewhere here, the first thing you determine is the reasonable distance where you can place your stop loss. If we're getting in somewhere there, I can put my stop loss on somewhere here on maybe I can be risking about 20 pips, right? 20 pips. And then if I'm risking 20 pips, I'll obviously be going for 40 pips. So I already know that. I quickly just go to Lionheart Funding Program. So let's just go here to Lionheart Funding Program Position Size Calculator. So I want you to use the Lionheart Funding Program Position Size Calculator to calculate your risks, because that's going to give you the accurate lot size you're going to use on that trade, so that you can only risk a particular percentage. So I go here. When you go to Lionheart Funding Program, just go to Tools and then click on Trading Calculators. As easy as that. When you click on Trading Calculators, what you have to do is to return here and check the currency pair is Euro JPY, right? So since it's Euro JPY, where's my Chrome again? I'm just going to come here, Position Size Calculator. So position size in pips, you click there, and then here we need to put Euro JPY. Euro JPY should be somewhere just here. Euro JPY should be, just give me a minute, guys. We have all currency pairs here. Euro JPY. So Euro JPY, yeah, this is Euro JPY right there. And then currency pair is this. Account balance, remember I have 11,200, all right? So you put the account balance, and I'm going to be risking 1%. So percentage risk is 1%. Account size $11,200. Stop loss, we're going to be risking 20 pips, and then we click on calculate. All right. Remember, we're looking for the lot size that we can use on this trade, so that we can only risk a particular percentage, so that we can only risk 1% of our account. All right. Euro JPY, this. Press the okay. So let's click on calculate again to see the value the calculator is going to give us. Let's just click here again to see. Perfect. So amount at risk, we're going to be risking $112. So $112 is 1% of 11,200, right? I'm only risking 1% of my account. And then lot size we're going to use is 0.87. So I can just round it up. We're going to use 0.9 lot size. So I quickly come back here again, and then I go here and I put 0.9 lot size, and I click on buy. Boom. Can you hear that? So if I go now to my trading terminal, you'll be able to see the trade right there. So we need to modify this trade. Just click on it, go right click on it, quickly go to modify, and then you go to where it says stop loss in points. So stop loss, we're going to put our stop loss on 20 pips. Remember, 20 pips is the same as 200 points, and we're going to be going for 40 pips, which is the same as 400 points. That's a risk to reward of 1:2. Voila, you can see that's our stop loss. If I just put in a little bit, that's our take profit right there. Boom. So you just place your first trade, and hopefully this trade is going to be a winner. Or if you do this on 10 trades, even if you are close from your village, you're going to have at least 4 trades that are going to be winners. And if you have 4 trades that are winners and you're going for a risk to reward of 1:2, let's do the math. 4 trades that are winners. For every winner you have, you make 2%. So you made a total of 4 times 2, 8%. Then out of those 10 trades, 6 of them are going to be losers, right? Because you had 6 which were losers and 4 winners. 6 of them which were losers, you were risking 1% per trade, meaning you lose 6% and you made 8%. At the end of the day, what's your net? Net of 2%. Show me someone who can end the month with just plus 2%, and I'll show you a multi-millionaire when it comes to Forex trading. So practice this strategy as much as you can. Go back to your demo account, go back to your pro firm accounts, go back to whatsoever account you're using. Practice this strategy, and trust me, this is gonna be a bomb when it comes to trading. We have testimonials everywhere of people using these simple strategies, and they're getting payout, they're getting cash out in Forex trading as crazy. So I'm gonna keep you guys posted. We're gonna stop episode 1 at this particular point in time, but please make sure you subscribe to my channel and follow this whole episode, since I'm gonna be recording everything for you guys to see how you can do it step by step on a live account. So make sure you're subscribed to my channel. Make sure you leave a thumb up on this particular video, so that we can get the video to at least 1,000 likes. That will also motivate me to drop part 2 as fast as possible. Remember, you can see I'm on my vacation. My wife made this trip for me to come here and celebrate my birthday, to come here for also our anniversary, but I'm also creating time for you guys. So the only thing I just want you guys to do is to leave a thumb up on the video, like the video, share with someone, subscribe to the channel if you haven't done so. And while I'm on my vacation in Vietnam, I also know you guys are there printing money. Thank you guys so much for watching. If you want to use my recommended broker, my recommended prop firm, my trading signal, everything that has to do with me, guys, check the link below to be able to use all those services. And I'll see you guys on these other videos, or I'll see you guys on the next episode. Peace.